Hello, my name is Annie. And today is Tuesday, July 11, 2023. Today's curated videos are from Jeff Snyder at EuroDollar and Stephen Van Metre, both business associates and mates. So let's get started. In the first video from EuroDollar University, Jeff Snyder discusses the labor market and its influence on the economy. He highlights that instead of being robust and resilient as believed, the labor market is showing signs of slowing down, heading towards a recession indicated by job cuts, weaker employment statistics, and revisions in labor numbers. He mentions that the belief in a healthy labor market contributing to inflation isn't supported by the data. Referring to underperformance in key cyclical industries like manufacturing and wholesale, he identifies further signs of economic weakness. He also emphasizes that the decrease in temporary work positions is a concerning trend, not seen since the 2008 crisis. The key points from Jeff's video include: the labor market is slowing down, contradicting the belief of resilience and robustness. Job cuts and weaker employment statistics are evidence of a potential recession. Crucial cyclical industries such as manufacturing and wholesale are underperforming. The decline in temporary work positions since 2008 is a growing concern. Monthly changes in employment rates can be misleading and don't always reflect the true economic condition. There's a visible downward trend in payrolls, hours worked, weekly and hourly earnings. The U6 underemployment measure in the Household Labor Survey has seen an increase, suggesting further labor market weakness. Rapid shifts in labor statistics and constant reassurances from Bloomberg and Jay Powell about a strong economy may lead to ignorance of potential recessions. In the next video titled "The Unthinkable Just Happened, and It Has Dire Consequences," by Steve Van Metre discusses the economic slowdown with consumers resorting to pawning their possessions, indicative of the alarming financial situation. He taps into how this is against the narrative of a robust economy pushed by public authorities. He elaborates on how low real wage growth, mired further under high inflation and debt, is pushing consumers to pawn shops. He discusses insights from the labor market, including a drop in job openings and initial claims, and explains the impact this has on discretionary spending. Steve also covers poor job growth and a slowdown in hiring. He also critically tackles Bidenomics, citing that while cash injections during the pandemic did boost individual finances temporarily, concerns arise from dwindling excess savings. The key points from Steve's video includes: consumers resorting to pawning or selling items, indicating a possible financial crisis under high inflation. Google searches for pawn shops began increasing in January and spiked at the beginning of July, signifying tough financial times. Waning real earnings due to inflation, coupled with increased borrowing costs due to increased interest rates, potentially leading to reduced discretionary spending. Slow hiring and stagnating wages tied to the economic policy and potentially excessive inflation. Significant decrease in job openings and possible surge in layoffs according to the JOLTS, Job Openings and Labor Turnover Survey. An analysis of payrolls shows an overarching trend of jobs slowing down, possibly pointing towards a recession. Average hourly earnings have been negative, with total compensation failing to keep up with inflation for over a year. Slowdown in the labor market despite claims of a robust economy from public authorities. The third and last video is hosted by Steve Van Metre, where he warns viewers of a potential shock about to hit the stock market. He explains that the initial 15 days of July are historically the best trading period for US equities, but from July 17th, stocks start to fade. The video also explains how machines follow the market momentum, and when it turns downwards, the machines become sellers instead of buyers. Further, he discusses how the selling points for equities, bonds, gold, and the dollar are governed by algorithms contained in his show's reports. Assuming the trend, sell positions for these securities are rising, indicating potential market downturns. He stresses the importance of trade stop losses, as applied effectively by machines. Key points include: stocks may face a significant decline after the first 15 days of July, which historically have been the strongest period for US equities. Market momentum dictates machine behavior, and they turn into sellers when the market inclination is downwards. Goldman and TD Securities data imply the positioning of machines is dictating market movement. The momentum of equities, bonds, gold, and the dollar is at extreme levels, indicating a potential reversal. There is an impending sell-off in gold with no support from machines to drive up the prices. If gold does not go anywhere, machines are likely to hit this trend and start to sell it. The dollar momentum is waning and could be moving downwards, validating a slowing economy. A move to around 98 is expected on the downside. We have taken 1 hour of YouTube video and condensed it to less than 6.5 minutes. Of course, you could have read it in less time. If you enjoyed this curated video, give it a try. You are free to cancel whenever you'd like. For less than 30 cents per day, you get virtually unlimited video summaries each month. Your AI-generated summaries will be delivered in real time directly to your mobile phone. With Tube on AI, you can stay up to date with your favorite influencers without spending hours of your time watching lengthy videos. Thank you for taking the time to review this curated video. We hope you found it useful. With Tube on AI, you can unlock insights, embrace efficiency, and save time. Click the join button now and start getting back your life without missing the content you love.